So this is a sum of October-November 2022, paper 21. It is related to limited companies. Ira, please read the
Yes.
question.
Okay. The directors of H Limited provided the following details from the statement of financial position at 30th September 2021. During the year ended 30th September 2022, the following transactions
Wait.
took place.
This is the opening balance of your share capital, share premium, and retained earnings, correct? Okay. Now, what do they want from you? First, read that. They want journal entries to record the transaction. Dates and narratives are not required. Are you with me? Come on, read the first one.
1st November 2021 paid a final dividend of $0.06 per ordinary share.
Okay, Farhan, tell me what are the number of ordinary shares that you have?
200,000.
Hmm.
So we're gonna multiply 200,000 with 0.50, which will give us 100,000.
Darling, when you want to find the number of ordinary shares,
Yeah,
you
I meant divide. I meant divide. Sorry, I meant divide.
divided by 0.50.
0.50.
So,
400,000 miss.
ordinary shares you have? You have 400
400,000.
ordinary shares, 400,000 ordinary shares. What is the amount
Yes.
of dividend that you're going to give?
0.06.
So, what will be the dividend amount?
So multiplied by 0.06. 24,000 miss.
24,000. Can you give me the
Yes.
journal entry of giving dividend?
Uh, Wait, miss. Let me just write down my working.
No, that you do later. First, give me journal entry for paying dividend.
The journal entry for paying dividend. So dividend would be credited. Will it be credited 24,000?
Is money going out?
Yeah.
Yeah, money is going out.
Then,
Paying dividend now.
yeah,
So will it be retained earnings credited?
money is going out. So, what will be credited?
Bank?
Of course,
Oh,
the rule does not change.
okay.
Okay, a bank.
Bank will be credited.
In
So, what
dividend.
Yeah.
do you say? Where is dividend paid from?
Retained earnings.
Retained earnings.
Earnings would be debited.
Okay.
Instead of retained earnings, even if you write dividend paid, they will not cut your marks.
Okay.
Okay. So this is your first
Yeah.
journal entry. Please write it in the space that is provided to you.
Hmm.
Can I go ahead?
Yeah.
Yes.
Read the next one.
Okay. So on 1st January 2022, made a right issue of 2 ordinary shares for every 5 shares held at a price of 0.60.
Okay, fine. Come on, Farhan, explain me.
Okay, so basically the company made a right issue of 2 ordinary shares for every 5 shares held. So that's 2 divided by 5.
Okay. What are the number of shares that they have?
The number of shares that they have is 400,000 shares.
Okay. So what will you get?
So 400,000 into 2 divided by 5,
Hmm.
which gives us 160,000.
So you have 160,000 shares.
Yeah, 160,000 shares held at a price of 0.60.
So the right issue is made at 0.60.
Yes.
What will go towards capital?
So you do 1 minus 0.60.
By 1. What is the face value?
Oh yeah, 0.50. Sorry.
So towards the capital will go 0.5
0.50. Yeah.
and towards the premium will go. What will go towards premium?
0.1.
0.1.
0.10. So how much
Yeah.
will go for share capital?
For capital means 80,000.
80,000. For premium,
And for premium, 16,000.
okay. So come on, give me the journal entry for making a right issue. So what happens
Okay.
when you make a right issue? What happens when you make a right issue?
Hmm.
Right issue means you are giving shares to your shareholders at a premium
Holders.
price but less than the market value.
Yeah, this is the market value.
So right issue, you're giving shares to your existing shareholders.
Yes.
If you're giving shares to your existing shareholders, that means money is coming in.
Hmm.
Yes.
How much money is coming in?
96,000.
96,000. So money coming in means what debit?
Bank debit.
So I will say bank debit. How much?
Yeah. 96,000.
96,000. What is credit?
Share capital and share premium.
Share capital is credit. Share capital will always be credit with which value?
Face value.
Face value. So share capital credit 80,000 and share premium
Share premium.
credit by
16,000.
1,000.
Hmm.
Any doubts with this?
Hmm.
No.
No? So
No.
you have increased how many shares? 160,000 shares.
Hmm.
160,000 shares have been increased for right issue. Are you with me?
Yeah.
Yeah.
Come on, Ira, read the next one.
4 July 2022 paid an interim dividend of $0.02 per ordinary share.
So interim dividend is how much?
0.02.
What is the number of shares?
400,000.
Think properly. This was what you originally had.
And then you got
And
20.
then you made a right
160.
issue.
Yeah, 160 into 0.02.
So how many interim dividend will be on how many shares?
Wait,
Hmm.
how many shares did we make a right issue?
160, na?
So 200,000 plus 160,000, na?
Ira, what is the number of shares you originally had?
Oh,
Originally is
but
400,000.
yeah, okay, 400,000 shares.
And how much was the right issue?
160.
160.
1,000 you originally had. The
160,000.
right issue was for 160,000 shares. So this total is how much?
560,000.
560,000.
560,000 shares. So interim dividend will be on how many shares?
560,000.
0.02. So 11,200.
11,200.
Hmm.
You're paying interim dividend. What will be the journal entry?
So the journal entry, a dividend would be debited. Yes.
Dividend paid or what else?
A bank.
Okay. From where you pay interim dividend?
From dividend paid is from retained
Retained
earnings.
earnings.
Debited 11,200. What will be credited?
Bank.
Money is going out, right?
Hmm.
Money is going out.
Yeah.
Now what will be credited? Bank. Come on, next one.
Okay. So 31st August 2022 made a bonus issue of one ordinary share for every 4 shares held.
1 minute.
That okay.
Come on.
So made a bonus issue of one ordinary share for every 4 shares held. So 1 divided by 4.
What is the number of shares held?
5.
Uh 560,000.
560,000. So your bonus
Yeah.
issues for how many shares?
So 560,000
140.
into 140,000.
140,000 shares.
Yeah.
What is the meaning of bonus issue?
Bonus issue is
You minus it from share premium.
What is the meaning of bonus issue?
meaning of bonus issue. Miss, isn't like bonus issue it's not related to the shares, is it? Like,
You're saying you're giving shares and you're saying you're not giving shares.
okay, okay, yeah, all right. So bonus shares is basically it's when the company gives out an extra amount of shares to their existing shareholders
Okay.
without cost.
So they give shares to the shareholders without cost.
Yes.
So they're giving 140,000 shares.
Yeah.
Into the face value. What is the face value?
0.5.
0.5.
0.5. So
So
what is the
70,000.
amount they are giving? 70,000.
70,000.
So you're giving shares without cost. And whenever you say this, reserves are maintained in the most flexible form.
Yeah, that means revenue reserve will come, wait, share capital will come first.
Huh?
Capital reserves will come first, yes,
So
then
you will
revenue
use
reserves.
capital reserves first.
Yeah, that's what I meant. Capital reserves
Share
will come
premium.
first, then revenue reserve.
And you will use revenue reserves later.
Yes.
Yes?
Yeah.
Okay, fine. Now give me journal entry for this.
Okay. So it's gonna be
So share capital is increasing
share cap.
by 70,000.
So
So
share
credit.
So
capital
that's good.
credit.
Share capital credit. Yeah.
But money is not coming in. You're going to use reserves.
Hmm.
Mm,
Which reserves you'll use first?
Share premium. Capital
share-
reserves.
Share premium will be debited by
50,000. No, you added something not to it.
what I added. Yeah, but we need this. Yeah. We added for right issue, na?
Yeah, we had right issues.
16,000 for right issue.
Yeah, 16,000. So it's 66,000 basically.
66,000 for share premium.
And then you're
Debit.
4,000 from
Retained
retained
earnings.
earnings. So retained earnings debit.
So it would be retained earnings debit.
Debit. Yes.
How much? 4,000.
4,000.
So you complete your journal entries.
Yeah.
Are you with me?
Yeah.
Yes.
Come on. Share 3 reasons why a company makes a bonus issue of shares.
Bonus issue of shares.
Why do you make bonus issue of shares?
Oh, miss, I have one point. Because it is less expensive than right issue.
In right issue, understand one thing. In
Okay.
right issue, you get money.
Okay.
You are selling the shares to your existing shareholders, but at something less than the market value.
Yeah. Okay.
What happens in bonus issue? In bonus issue, you are giving shares free of costs.
Hmm.
You are using your profits and you're giving the shares to the shareholders free of cost. There will be no money coming in.
Okay.
So what usually happens is that when you have too much of profits available with you, you
Hmm.
need to give dividend to your shareholders.
Yes.
When you declare dividend, you have to pay dividend in cash. Yes?
Yeah.
Yes.
But suppose this profit is just in the books and the cash is not available.
Yeah.
Okay, maybe it is outstanding or still yet to be received or whatever. So in that case, to keep the shareholders happy, what does the company do? Instead of giving dividend, they give bonus shares. Because here they will not use cash.
Yeah.
They will use what? Profits.
Profits.
So reasons why you make bonus issue of shares.
Hmm.
Come on.
The first will be to pay off dividends when you don't have.
So it is issued in place of dividend.
Hmm.
Okay. It is issued in place
Okay.
of cash dividends.
Hmm.
Okay. What else?
Uh,
Bonus is paid from where? Bonus issue is given from which profits?
Bonus is given from retained earnings and share premium.
So it is given from capital reserves first.
Yeah.
So
yeah.
you use of your capital reserves.
Huh.
Yes?
Yeah.
Yeah.
What do? You use of your capital reserves. So that
Yeah.
means you are getting rid of your capital reserves.
Hmm.
Yes.
Okay. So capital reserves can only be used to pay dividend. I'm sorry, capital reserves that is share premium can only be used to give bonus shares.
Hmm.
They cannot
Yes.
be used to pay dividend.
Okay.
So company can give bonus issues when they want to liquidate their capital reserves, get rid of the capital reserves that is not being able to use to pay dividend.
Hmm.
Yeah.
So second reason, to enable the company to liquidate
Hmm.
which reserves?
Capital reserves.
To liquidate capital reserves that cannot be used to pay dividend.
Okay.
What else? It keeps the shareholders happy.
You can write that.
Hmm? Increasing the worth of the company. Are you with me?
Yeah.
Two features of preference shares.
So preference shareholders have.
Farhan has done all the
Yes.
training, so he will tell us.
Okay. So what's the question is? Hold on, let me see. State two features of preference shares. Oh yeah, I remember one. Shareholders have no voting rights. Is
You
that
have
one of them?
MS open in front of you.
I don't have MS open in front of me. I can show you.
Okay, fine. Shareholders have no voting rights and
I'm kind of forgetting the other one. I just remember this one because it's the most funniest one. Shareholders have no voting rights.
Okay, so one is that they have no voting rights, and the other one is that they receive a fixed amount of dividends, and when the business shuts down, they're not the first to receive the payments.
so in the event of winding up of the company, they receive the capital.
Okay.
Hmm?
Okay. Yeah.
Hmm.
They have preference over the ordinary shareholders to receive the capital in the event of winding up of the company.
Hmm.
So with this,
Yeah.
complete October-November 2022, paper 21, question number 3, which is related
Oh.
to limited companies.
Okay.
Okay.
Yeah.